Welcome to this second tutorial of Module 1. In the previous tutorial, I told you that the starting point to mastering your money, no matter where you're at right now and no matter what your objectives are, is to consistently spend less than you earn. And that the key to consistently spending less than you earn is to set up and live to a realistic budget. In this module, Module 1, I am going to share with you the proven budgeting system that I have successfully taught to people all over the world. A system that has evolved from the principles that I learned from my grandma's glass jar budgeting system. The purpose of this tutorial is to help you identify your income, the income you will base your budget on. Understanding your income is critical to this process because, like it or not, your income defines the upper limit of your spending. When establishing a budget, you want to include income that is both reliable and regular. Reliable means that you know how much you will receive, and most importantly, you know it will turn up. Regular means it hits your bank account either weekly, fortnightly, or monthly. Now, if you receive a quarterly bonus or distribution that you know you can rely on, and that is typically the same amount each quarter, then you could at a stretch include this too. Now, you may receive dividends, bonuses, tax returns, and government payments throughout the year, which is great, but unless they are regular, they can be very hard to budget to. So where possible, budget an income that is reliable and regular and treat these more irregular payments as a bonus. A common question I get asked in relation to income is, what income figure do I use? People will often look at their pay slips and go, gosh, there are just so many numbers. Which of these numbers am I supposed to use to base my budgeted income on? To put it very simply, the income you want to budget on is the one you actually receive in your bank account. What you receive in your bank account is typically the money that comes to you after tax and superannuation have been deducted. And if your income tends to fluctuate from pay to pay, what you want to try and do is base your budget on the lower income figure that you consistently receive. At Grandma's Jars, we deliberately budget to a monthly cycle. So it does not matter if you get paid weekly, fortnightly, or monthly. Experience has taught us that budgeting to a monthly cycle makes managing your money so much easier. I will talk about why we budget to a monthly cycle in a later tutorial. But what this means is if you are getting paid weekly or fortnightly, you are going to need to convert your income to a monthly figure. Now, the Grandma's Jars application will do this conversion for you. But just so you know how it works, I will quickly take you through the manual calculations now. To convert a weekly or fortnightly income or expense to a monthly figure, you just follow this two-step process. Step 1, convert your weekly or fortnightly income to an annual figure. To do this, multiply your weekly income by 52 or your fortnightly income by 26. Then step 2, divide this annual figure by 12 to give you an average monthly figure. This gives you an average monthly figure across an entire calendar year. However, when it comes to budgeting, your income rarely comes in as a nice average monthly figure. If you get paid weekly, most months you will receive 4 weekly pays in a month, and then every third month you will receive 5 pays. You can see here that if I get paid every Thursday in 2017, I will have received 4 pays in January, February, April, May, July, September, October, and December. And in March, June, August, and November, I will have received 5 pays. And if you get paid fortnightly, most months you only receive 2 pays in a month, and then approximately every 6 months you will receive 3 pays. So if my first fortnightly pay for the year was Thursday, January the 12th, my 3 pay months for 2017 would occur in June and November. While the average monthly figure is more accurate when you are looking at it over a whole year, my preferred calculation is to base your budget on what I call the minimum monthly income. The minimum monthly income is simply this: if I get paid weekly, I budget assuming I will only ever receive 4 pays in a month. And if I get paid fortnightly, I budget assuming I will only ever receive 2 pays in a month. The beauty of budgeting to just 4 weekly or 2 fortnightly pays is that it bases the budget on a predictable income level. And better yet, it creates a form of forced savings. So looking at this example, if I get paid $1,000 per fortnight, my average monthly income would be $2,166 per month. But what actually happens is 10 months of the year I will receive 2 pays of $1,000, so $2,000 for the month, and twice a year I will receive 3 pays or $3,000. So where possible, I want to base my budget on an income of $2,000 every month, and when the 3 pay months roll around, I can treat that third pay purely as a bonus. Of course, I realize that not everyone can afford to do this, but if it is at all possible, please try to use this minimum monthly income as a baseline for your budget. Now what I want to do is walk you through what this looks like for our case study, Dean and Emma. Just a reminder that Dean is a civil engineer working for local government and Emma is a teacher at the local secondary college. Dean currently earns $52,000 per annum, which equates to $1,625 per fortnight, and Emma currently earns $67,000 per annum, or $2,033 per fortnight. Now, if we manually convert their incomes to a monthly figure, you can see that Dean's $1,625 becomes an average monthly figure of $3,520. So this is his $1,625 times it by 26, because there's 26 fortnights in a year, and then divide it by 12 to provide this monthly figure. And his minimum monthly income is simply 2 times 1625, which equals $3,250. For Emma, her $2,033 per fortnight becomes an average monthly figure of $4,404 and a minimum monthly figure of $4,066. This gives them a combined average monthly income of $7,924 and a combined minimum monthly income of $7,316. The difference between these two figures is $608 per month. Because Dean and Emma know they will consistently receive the minimum monthly income every single month, I recommended that if possible, they should base their budget on the $7,316 minimum monthly income. Not only will this make their budgeting easier, but it will mean that their third pay on their 3 pay months becomes purely savings. Now that we understand the difference between the minimum and average monthly calculations, let's have a quick look at the Grandma's Jars application. Once you have logged into the application, you will come to the setup phase. You will notice at the top of each page, there is a video tutorial to guide you through the setup process. So I won't take too much time in this tutorial stepping you through the detail. Step 4 of the setup wizard walks you through the process of adding your income to the budget. All you need to do to add income is click on the Add Income button. The following pop-up will appear. Add the name of your income. So here, I'm going to type in Dean's Pay. Dean receives $1,625.60 per pay period. He receives his income fortnightly. And his next payday is Thursday the 22nd of September. Dean and Emma's central working account will receive both their pays. So I will select Central Account. Now you will see Dean's Income tab appears in the left, and just to the right of this is a summary of his income details. If I click on this pencil here, I can edit his income details. And if I click on the garbage can, I can delete his income altogether. I can now add Emma's income using the same process. Click Add a New Income. Type in Emma's income into the income description field. She receives $2,033.33 per pay period, and she gets paid on a fortnightly cycle. And her pay also goes into their joint central working account, so I will select Central. I then click Add Income to save this income to the budget. You can now see Emma's income just below Dean's. So there you go, pretty simple. That's it for setting up an income in the setup phase. I want to jump forward to the main budget now. This is the dashboard of the main budget. You will land here as soon as you have completed the setup phase. On the main budget, you will find the income details under My Financials over to the left here. Once on the income page, you will see Dean and Emma's incomes as entered during the setup process. Below this, you will see a list of income transactions that have occurred so far this month. I need to point out here that once you have entered your incomes into the budget, the system will automatically generate an income transaction in the budget every time the next payday rolls around. This is based on the frequency and the date of next payday you initially entered against your income. So it is important that you enter the correct dates for your next payday. The next table shows you Dean and Emma's incomes in more detail. Firstly, we can see what they receive each pay. Dean receives $1,625.60 per fortnight and Emma receives $2,033.37 per fortnight. Their next payday is Thursday, September the 22nd, and their minimum monthly income is $3,251.20 for Dean and $4,066.74 for Emma. And the next figure along is the average monthly incomes of $3,531 for Dean and $4,417.74 for Emma. You may notice that these average monthly figures are slightly different from the ones we manually calculated earlier. This is because my overly detailed developers decided they needed to include leap years into the calculations. And in the bottom right here, you can see the combined total average monthly incomes of $7,949.55. As I mentioned to you earlier, I recommended to Dean and Emma that they try to budget to their minimum monthly incomes, and where possible, I recommend you do the same. So there you have it. Your starting point for getting a realistic budget set up is to first understand your income. Your homework? Identify your regular and reliable incomes. And while the Grandma's Jars application will do this conversion for you, I recommend you manually work out what your minimum monthly income is, what your average monthly income is, and then calculate the difference between your average and your minimum monthly income so that you know what it is. And finally, go to step 4 of the Grandma's Jar Setup Wizard and add your income.